What is the difference between a traditional and Roth IRA? And what are the contribution limits for 2017? Amanda here from the Business Finance Coach, and today I'll be clearing up the differences. Whether you contribute to one or both, the max amount you can contribute in 2017 is $5,500. If you're over age 60, you can contribute another $1,000, equaling $6,500. Now, the one main difference between a traditional IRA and a Roth IRA is that you can contribute to a traditional IRA regardless of how much income you make. However, if you exceed certain thresholds, then you don't get a deduction. However, some of those income limitations have changed for 2017. I'll cover those in a second. With a Roth, on the other hand, if your income exceeds certain limitations, which have always been higher than the traditional IRA, then you can't contribute at all to the Roth. It's not allowed. However, what can happen because you're contributing during the year, and then let's say you get a bonus that pushes your income above the threshold, you may have what's called an excess contribution. So now let's take a look at the contribution limitations, which are based on your income. So if you do not have a retirement plan at your work, then the new IRA deduction limitations for 2017 are actually any amount. These used to be rather low, not anymore. So if you're single, had a household, qualifying widower, any amount, married, filing joint, or separate, any amount, and you can take the full deduction. So this is totally new. Otherwise, if a spouse has a plan at work, then there are limitations right under 200,000. It phases out. Or if you're married filing separate with a spouse who is covered by a plan at work, then it's less than 10,000. So now let's take a look at the Roth. Unlike the traditional, which however now because there's no income limitation, it doesn't matter, with the Roth, you literally can't contribute without a penalty over these amounts. If you're married, or a qualifying widower, you can contribute up to income of $186,000. After $196,000, you can't contribute. The amount reduces. The $5,500 or $6,500 if you're over 60 phases out over $186,000 to $196,000 of income. If you're single, had a household, or married filing separate, and you did not live with your spouse, up to $118,000 of income, you can contribute. The amount then phases out up to $133,000. That's it for the income limitations and the differences between the traditional IRA and a Roth IRA. Be sure to check out my other videos about which is better, the Roth or the IRA, as well as the backdoor Roth, as well as what to do if you over contribute to one of these plans.